Welcome back to the portfolio, everyone. And in this video, we're going to determine if Facebook is a buy right now at the $250 price point. So what we're going to do is a full analysis on this company. We're going to take a look at their current financial position, go over some key financial metrics, take a look at their future growth estimates, and of course, do an examination of their financial statements to see their trending over the past few years and what we expect for the future growth of this company. So Facebook, we all know their main platform, of course, the Facebook website, but they also own and operate a bunch of different other social media platforms that have daily users from all across the world. So this is one of the FANG high growth tech stocks that always making headlines in the news. As of late, there is a little bit of negative headlines around the company. We have seen a little bit of a share price decline over the past month. You can see here, shares are down over 17% this month alone from their previous high. So is now the time to jump in and buy Facebook during this most recent dip. So before we do a deep dive into Facebook, as you know everyone, I am the Gen Z investor, and every single day we talk about the stock market, we go over different stocks you can buy and sell, and do a full analysis into overall market performance or any other big market news and headlines. And in this video, we're going to do a deep dive into Facebook. This was a highly requested video. People love Facebook stock and want to hear my opinion and my thoughts on the company. So what we're going to do is go through their financial statements, some other key metrics for the stock, and just determine if we like it at this current price point during this 17% decline over the past few weeks. So we're going to take a quick look at their price chart, and they are still up 30% over the past 12 months. This includes the March lows and the recent decline we've seen over the past few weeks. On the 52-week range, they've peaked at $304 a share, but have seen that nice pullback and are trading kind of close to the middle on the 52-week range. They have a market cap of over $700 billion, and this is completely a growth stock. They do not pay out a dividend to shareholders at this point in time. So if we jump over to take a look at some other key metrics for the company, you can see here over a 5-year span, beautiful long-term share price growth, consistent growth year over year, and if we take a look, they've increased 159% over the past 5 years. This company currently has a PE ratio of 30.73 and has been posting earnings per share of $8.18. So if we take a look at Facebook, what they really need for this company is consistent growth. They generate revenue, of course, from advertisements and many other different smaller streams, but what they really need is attention. They need people on their platforms so they can sell advertising space to different businesses. They need people to use their platforms every day in order to monetize each individual. So what we want is growing user base. And you can see here, Facebook daily active users, each and every quarter, they're growing. Facebook is gaining newer users across all their platforms in various places around the world each and every quarter. US and Canada at the bottom, you can see consistent growth over each and every quarter, and other markets as well as Asia and Europe are seeing growth throughout each and every quarter as well. So this company is continually growing their user base, which is exactly what you need from a kind of social media based tech firm. Another thing to look at Facebook is at this $250 price point with a PE at around 30.73. How is this stock valued regarding their historical PE ratios? Are they considered cheaper, more expensive than before? So we take a look at this chart. This is their historical PE ratio for about the last 3 years. So currently sitting just above 30 at 30.73. You can see here, somewhat an average PE. We see some dips in PE ratio below 30 to around the 24 range. Then you also see some higher PEs at around 32, 32, 30, up around the 33 range as well. So you can see here a PE ratio for Facebook right now, kind of in line with their 3-year average. No outliers whatsoever. It's kind of trading in the middle of their historical 3-year average PE. So the company with regard to price to earnings ratio is, I'm going to say, be trading at a fair valuation. If we take a look at a fair value for share price metric, this is from Simply Wall Street, and they actually see a 16.9% undervalued price point on Facebook's share price at this current point. So you see Facebook's fair value to be around $298 a share, and with the current price point sitting around $248 to $250, they actually believe it is close to 17% undervalued. So right now, if we were to buy the stock, you can see here it's currently trading at a historical PE in par with its 3-year average, and Simply Wall Street kind of estimates that it is undervalued at this current price point. But if we buy in today, we're looking for future growth. We want to see this company continue to grow over the long term, and we want that share price to increase in order to actually make some money when we eventually choose to sell. Because they do not pay out a dividend, we are looking for that share price growth to reach that 10+% annual return each and every year. So if we jump over to Yahoo, they do some analysis, they take into consideration over 40 analysts, and they give different estimates on what the future growth of Facebook may be like. So what they're expecting, if we take a look at the bottom, is some growth estimates. Because of course this is a growth stock, we really want the share price, we want to see revenue and earnings per share growing each and every year. So on the current year, it's expected to see close to 25% growth, 26% growth next year, and an average over the next 5 years, they're expecting over 16% annual growth. Over the past 5 years, share price and of course earnings and everything have exploded, and Facebook has posted an annual return of 42%. But that kind of fast-paced return of over 40% is somewhat unsustainable. So analysts are expecting close to a 16% annual growth for this company over the next few years. And this chart on the right, the dark green represents strong buy, light green as a buy, hold, underperform, and sell. And you can see here, as of September, their most recent report, 17 strong buy, 24 buy, and very few holds or sells, which coming in at a 1.8 represents a current buy rating from Yahoo Finance. Another estimate from Simply Wall Street shows Facebook's future growth is estimated to be at 18.5% annual growth. So Yahoo Finance shows an estimate of 16.4, and Simply Wall Street shows 18.5. So very close estimates from different groups of reporters. And you can see here, this is where they currently sit. Revenue of over 75 billion with earnings of over 23 billion. And what they're expecting from Facebook is to see that top line and bottom line growth year over year for the next 3 to 5 years, which is absolutely incredible. And that is everything we're expecting to look for a growth stock. Next, we're going to take a look at their financial statements. So we took a look at the current position, trading close to its historical average PE ratio over the past 3 years, could be considered undervalued with regard to Simply Wall Street on a 17% dip over the past 1 month, and 2 different sets of analysts of over 40 different people, 2 separate sample sizes, all show a double-digit earnings expectation for Facebook over the next 3 to 5 years, and that's kind of a good sign to see. Now let's take a look at how they've been performing over the past and their current financial position. We're going to start off by taking a look at their income statement. So you can see here, Facebook's total revenue has been performing beautifully. Solid upward trend, double-digit growth year over year is absolutely incredible. Year-end 2015, they posted just shy of $18 billion of total revenue, all the way up to over $75 billion in the past 12 months. So over 3x their revenue in a matter of 5 years, which is absolutely incredible. And if we go through the income statement and take a look at net income or the bottom line, you can see here a continuous upward trend in net income as well, a slight decline over the past 12 months, but nothing too worrying. Consistent net income growth, and this company has very high profit margins, and they continue to post positive results. So we know Facebook has a strong income statement. This is exactly what we want to see. High gross profit numbers, very normal expenses for a young tech company, and you can see here, nice high total profit margins. If we jump over to the balance sheet, what we want for Facebook is a nice current ratio, and they perform and actually have just that. What's impressive is they have over $58 billion of cash on their balance sheet, and these cash and short-term investments are what they use to acquire smaller tech firms. It's what allows them to pay for their research and development and allows them to really put their cash to work in any sort of deal to help expand the business. So they have a beautiful cash position that has only actually been growing year over year. They have a little bit of short-term receivables, and they have total current assets of over $68 billion. That's incredible. If we compare that to their total current liabilities of only $11 billion, they have a current ratio above 5, closer to 6, which is impeccable. This company's short-term financial position is flawless. There's no worry whatsoever that they will be able to operate over the short term. And if we take a look at a longer-term view, they have $139 billion of total assets, which following total revenue is on the balance sheet. You want to see total assets growing as the company expands and gets larger, And you can see here, they are doing just that. So they have total assets of 139 billion compared to total liabilities on this company of only 29 billion. This company has extremely low liabilities. They are currently posting around $58 billion in cash and investments on their balance sheet, with only total liabilities of under 30 billion. So this company currently right now could pay off all of their total liabilities for the entire company and still have close to $30 billion left over on the balance sheet. So a beautiful, beautiful balance sheet with Facebook. This is exactly what you want to see. Total assets continue to grow, very solid current ratio, not a lot of long-term liabilities, and another expectation we want to see from this type of company is total equity growing year over year, and that is exactly what Facebook has been posting. Each and every year, total equity in the company continues to grow, and a solid upward trend in this position. So Facebook is a solid company. Both of their financial statements, their income statement and their balance sheet are top-notch, some of the cleanest and best performing financial statements in the market right now, and I believe their balance sheet is very sustainable over the long term. This company will continue to operate the business extremely well, and I really don't believe they're going to have any issues whatsoever dealing with their current debt or any future debt at all, only because they have so much cash and investments and only $30 billion of total liabilities for the entire company. I believe they've set themselves up in a very beautiful financial position. Now we're going to wrap up by taking a look at different price targets for the stock. So people enjoy price targets because it gives them an expectation of what professionals in the field believe the stock will be doing. Of course, no one, not even Warren Buffett, can predict the short-term price movements of a company, and that is why we throw this at the end. We go through their key financial metrics first, we evaluate some future expectations, and we evaluate the key financial statements first before we take a look at somewhat speculative price targets. Although these are professionals who use different algorithms and historical performance and future expectation growth metrics, these are still estimates. In no way are these kind of guarantees whatsoever, and there's still a lot of issues to whether we will actually see these results come up. But the first set of analysts recommends Facebook as a strong buy right now, 31 buys, 4 holds, and only 1 single sell, and the average price target for Facebook over the next 12 months puts them up 17% to that $295 price point, which is very close to their current 52-week high that we have seen this 17% pullback away from. The second set of analysts currently show Facebook right now as a buy as well. We see Facebook with a 12.65% potential upside, 1 sell, 4 holds, 42 buy, and 1 strong buy rating. And you can see here, over the past 100 days, very consistent coming in with a buy and a price target that continues to actually go up as time goes on. You can see here 6 months ago, the price target for Facebook was at $242. Meanwhile, you can see continuous growth to where the price target is now $283 per share. And moving on, the final price target we have to take into consideration is from CNN Business, which represents a price target at that $295 price point, which represents over a 17 potential upside from their current share price today. Analysts, there is 38 buys, 3 outperforms, and 7 holds, but overall, a very solid recommendation from this set of analysts as well, and very consistent. Over the past 6 to 8 months, you can see here, consistent, more buys than sells, and a couple holds each and every month. So those are different price targets. Each analyst's expectation shows Facebook with at least a 15 to 20% potential upside in the next 12 months. They believe Facebook will return to that 52-week high at around that $300 price point, and they believe this company will continue to grow. There were some massive price and growth estimates for the stock in that high double-digit range. So will you be buying Facebook right now? For me personally, I do not own Facebook. Although the company has some beautiful financial statements, I personally try to stay away from growth stocks only because I am a dividend growth investor. And if I want some share price growth, I personally invest in companies who may be yielding 1 to 2% or even below 1%, which have massive share price appreciation. And those are kind of the growth stocks that I get into. They must pay out some form of dividend to me, but that is only for my personal dividend growth strategy. But for people who like growth stocks, I believe they should really take a look into Facebook right now. I believe although the entire market is down, now may be the time to do a deep dive. You always have to do your own research when investing, do full analysis on your own into Facebook to make that decision if this company is right for you. But what we did here is just go over their key financial metrics, went through some kind of growth estimates and price targets, and of course we examined their current financial position and their income statement, their balance sheet, which are both in a beautiful state right now. So thank you for watching. If you're into Facebook, let me know down in the comments below. I appreciate you tuning in, and I will see you in tomorrow's video.